Welcome back, and we're now hearing about Goldbug Peter Schiff saying sell now and buy back later, following right here our prediction and our analysis that the market has already topped out. And if we get any other higher highs in Bitcoin and potentially some other cryptos, this is a potential bull trap and just moves based on volatility. And in today's video, we're going to be exploring why I think this is actually the case, why all these Ethereum reserve companies, the Bitcoin treasury companies like MicroStrategy seem really bullish. When you zoom out and look at what's actually going on in the markets, it's actually not that bullish. And the charts are showing us some bearish activity. But nonetheless, we have the president of the United States also making deals, or at least his companies making deals with crypto's Crow exchange, or the Crow crypto company, and we're going to get into that as well and see the moves that have been going on in the Crow ecosystem. There's a lot happening, a lot to take in, a lot of analysis to consider. And to make sure that you guys are subscribed to this channel, that way you're always up to date on the newest info. We try to upload every single day to bring you the latest happening in the financial world. Sometimes we do deep dives into individual topics, categories, or cryptos themselves. And sometimes we're talking about the macro financial conditions in the market, like this video, so that we can understand where we are, where we're going, and how to position our portfolios to maximize the potential gains. And this brings us to the beginning of the video, where we're going to be talking about Goldbug Peter Schiff predicting Bitcoin could sink to $75,000. A prediction that I have been making for months now, since basically the beginning of 2025, that we will go below $80,000 at some point during this volatility, or even the potential bear market that's coming in the future. And why is that? Well, let's get into today's video. So one of the big numbers that we always have to remember is MicroStrategy's buy cost, right? Their dollar cost average, which is right here on their website, $73,000 at the beginning of September 2025. This is their dollar cost average price, meaning once the Bitcoin price goes below 73,000, technically, Strategy is in the negative. And what have we been hearing? Strategy is profitable. Strategy has all this Bitcoin. Strategy's stock going to keep going up. But there's a lot of shakiness in the market, as we've been exploring and kind of analyzing and laying out for you guys on this channel. A lot of it is not that bullish, because what we've been seeing is now MicroStrategy is going to continue to sell their shares on the open market. There's a lot of anticipation and speculation that they're going to be included in the stock index. And if they are, that is fairly bullish for the stock. But this is not a lock. And a lot of the investors who are pushing this narrative out to the average everyday person who don't really understand what else is going on with Stride, Strike, Stretch, and Strife. These are all debt facilities or convertible bonds or whatever you want to call them. They're debt to the company. And MicroStrategy has to come up with about $50 million every single month to pay the dividends for these debt facilities. And the only way that they're going to be able to do that, because they're not a cash flowing business, is to either one, sell their Bitcoin, or two, sell their shares on the open market, or three, raise more debt. But if you raise more debt to pay out dividends, what is that? And so that is, for me, why the $70,000 range is critical, because what will happen after that? I don't know. I think that there's going to be a mass panic in the market, that MicroStrategy may start selling. They may be forced to sell. Some of the other Bitcoin treasury companies that have higher dollar cost averages, they may start to get, like, there are so many potential issues here. But let's see what Peter Schiff is saying about this $75,000 level. Prominent Bitcoin critic Peter Schiff, once again, sounded the alarm, calling for Bitcoin to potentially drop to $75,000 below Strategy's average cost price. Well. Is Peter Schiff watching the Cryptoviser videos? Highly unlikely, but maybe. But either way, regardless if he's watching or not, I would imagine he's probably not watching YouTube and crypto YouTubers. But the thing is, I'm making a thesis that I have been talking about for months now. And now you're hearing other well-known, very, like, I understand he's a gold bug, but he's very well-versed on Bitcoin and crypto. And so if his analysis lines up exactly with what I have been saying for months, again, boom, that's another thing to confirm my thesis. It doesn't mean I'm right. It doesn't mean Peter Schiff is right. But it's just another kind of notch like, yeah, other people are starting to notice. Because the thing is, the market is about sentiment. So once people start to notice, wait, MicroStrategy's buy price is 75,000. So as we continue to drop lower, we're going to touch that price. Like it's going to happen. And I think the reason MicroStrategy or MicroSaylor is trying to stay at that $70,000 price is because typically in the bear market, based on just the previous few cycles, in the bear market, you touch the previous all-time record high from the previous cycle. So for instance, $70,000 is the all-time high from the previous cycle. So I believe that we're going to come back down to that to test that level. In the previous bear market, we hit $15,500. That basically was the top of the market in 2017, right? Between $15,000 and $20,000. Really, the $20,000 was like one type quick wick, right? And then the price came straight down. So we were testing that level. We came below the $20,000 range and hit the 15,500 in the bear market. And so in my view, we're going to hit the last all-time record highs in the bear market and potentially go lower than that. And so it kind of lines up with why MicroStrategy is keeping their dollar cost average around the $70,000 level. Because if it goes a little bit lower than that, like maybe 60,000, I think MicroStrategy is going to be good. Once you start to hit like 50,000, 40,000, there's going to be mass panic in the market, in my view, based on MicroStrategy. And it's not like MicroStrategy, I don't think they're going under. I don't think they're going to go bankrupt or collapse or anything like that. But it's a risk because they could start selling Bitcoin. They could just cause chaos in the market because people are worried that they're going to get liquidated or whatever. I don't think that's going to happen, but I think that the sentiment and the unknown, especially in the downtrending market, I mean, anything is possible. So in an August post, Schiff pointed out that Bitcoin slipped below $109,000, which is a 13% correction from the all-time record high. He said the decline highlights downside risk despite strong hype in corporate accumulation. He suggested holders should consider selling now and buying back lower levels, but stressed his advice doesn't apply to those who don't already own Bitcoin. Yeah, I mean, I would agree. I mean, even Anthony Pompliano just posted its official MicroStrategy or strategy now owns 3% of the Bitcoin supply. 3% of the entire supply, which is really a small amount. Obviously, on a global scale, it's a big amount, but it's a very small amount. People keep saying, oh, we're going to have a supply shock. We're going to have a supply shock. We haven't had a supply shock just yet. They're buying coins from whales who have been holding for over a decade now. And the maximalists still think that nobody's selling. It's incredible to see. Meanwhile, altcoin season appears to be kind of getting ready to gear up. Trump Media has set up a Crow, which is a Crypto.com coin, strategy in a $6.42 billion deal with Crypto.com. What in the Crypto.com is going on here? Let's find out. So Trump Media and Technology Group, the owner of U.S. Donald Trump's social media platform, announced a business combination with crypto exchange Crypto.com and the blank check company Yorkville Acquisition. Trump Media, Crypto.com, and Yorkville Acquisition entered into a definitive agreement to jointly establish Trump Media Group Crow Strategy. The entity will be a digital asset treasury company focused on the acquisition of Kronos, or the Crow token. Majority owned by Trump Media, Crypto.com, and Yorkville. Trump Media Group, Crow Strategy, aims to build a treasury of at least $6.42 billion. Obviously of Crow, but is that at bull market prices or bear market prices, right? Keep that in mind. According to the announcement, Trump Media Group Crow Strategy will fund its digital asset treasury with $1 billion in Crow tokens, $420 million in cash and warrants, plus a $5 billion credit line from an affiliate of Yorkville. The capital would make Crow Strategy the first and largest publicly traded Crow treasury company, the company said in the announcement, adding that it would potentially become the largest digital asset treasury company to market cap ratio in history. Now, again, this is going to start our conversation about these digital asset treasury companies. Because in my view, this is a huge risk right now. A lot of people are like dogpiling into a lot of these stocks that are announcing these crypto strategies and Ethereum and Bitcoin and everything else. But I don't think that it's that bullish right now. If they would have done it a year ago or a year and a half ago or 2 years ago, oh yeah, it would be super bullish. But now we're at the end of the cycle. Whether you think the cycle's over or that we're going to double from here or triple from here, I mean, it's effectively over. And so we're going to be moving into sideways trading and downward trending market and then sideways trading again before we can go back up. And so in that downtrend, I feel like everything is going to come down. And it seems like the whole market, even the maximalists, are saying they're not selling anything. And it's like, are they really not selling anything? They're not that, like, they're pretty intelligent people, right? And so these treasury companies, you have to understand, like, they don't care where the price is because they have a much longer time horizon. They could be, they could be in these assets for years. I mean, think about Peter Schiff. He's been in gold for how many years? And the gold price maybe doubled. And so crypto, they're thinking about, next cycle, the cycle after that, the cycle after that, and all the utility that they're going to build. Because if they're investing in, like, if Wall Street is investing in these companies, whether it, or these cryptos, whether it's Ethereum, Bitcoin, whatever, eventually they understand they're going to have to do things to enhance the networks. They're not just going to let a decentralized ecosystem, push the path, right? They're going to start, hiring and developing. And this is why you see like Consensus partnering with SharpLink, because Consensus is the main developer behind Ethereum, and they have been for many, many years, and MetaMask and all of those kind of integrations. So now Wall Street is going to potentially partner with them and do things on the infrastructure front. This is where we're seeing Ripple buying up large companies, like large percentages of ownership in companies around the world that are already doing these things. So they have like, 1,000 different companies that they own. And eventually they're going to all roll up into the XRP ledger. I mean, that seems to be what they're trying to achieve from a global dominance front. And what's different between what Ripple is doing and what all of these digital asset treasury companies are doing is Ripple already has the coins and they could sell them to then go fund the development. All these other ecosystems, they're just buying the coins and then they're going to eventually start funding infrastructure plays and stuff like that. That's what it seems like they're doing, because it's like, what does the crypto coin actually do? I personally don't know, but I would imagine it is on the back end of the crypto.com ecosystem and all the payments and stuff like that that they're using over there. And so, anyway, crypto.com, obviously you can see the price of the coin went straight up because now you have an institutional buyer that's talking about, buying $4 to $6 billion worth. It's pretty good if you think about it. But now let's kind of talk about the Ethereum companies, because it seems like this is very bullish and the price of Ethereum is moving up. But is it going to be sustained, or are these whales going to just keep selling their long-held coins with much lower dollar cost averages? And we're not going to really see impact to the Ethereum price, because that's where we're at with Bitcoin right now. That's why Bitcoin price is going down, even though they keep buying more and more Bitcoin. It's because the whales are dumping it because they see that this is the exit liquidity they've been looking for. Anyway, Tom Lee is now saying Ethereum could flip Bitcoin in terms of network value. Let's listen to what he says.
I think the upside case for ETH is actually higher than, let's say, Bitcoin did 100x. Could Ethereum do 100x? I think that could happen because there is probably a significant probability that Ethereum could flip Bitcoin as well in terms of network value. And then, if someone thinks Bitcoin's at $1 million, then imagine what it means for Ethereum, because it is not just Wall Street financializing onto blockchain, but it's AI, but it's also part of the U.S. focus on AI dominance, right? Ethereum plays a strategic role there.
In AI, how so? Anyway, he also talked about a very high probability that Ethereum will flip Bitcoin on this podcast with some Wall Street hosts on, I think, CNBC. Anyway, let's listen to what he says here.
ETH get what? How? I hate the term market cap because it's not applicable. Your company has a market cap. ETH doesn't have a market cap. Has a market size.
It has a network value.
What is the current value of all the ETH in the world?
I want to pause right there. That's very interesting that they're hesitant to say Ethereum has a market cap, because it does have a market cap. But again, Wall Street doesn't like the market cap like ranking because you have very high market cap cryptos that do absolutely nothing, that have no adoption, that Wall Street is not involved or interested in at all, and then you have other ones that are not in the top 10 or top 20 or top 30 that should be because of the fundamentals and the technology and all of that. So they are looking for better rankings of this, and I think this is where a lot of Ethereum comes into play because Ethereum is not. Let me rephrase. Ethereum is a productive asset, right? You can stake the Ethereum and make money. Maybe it's not that much, but you can also lend Ethereum in DeFi and earn money that way. Bitcoin right now is basically a non-productive asset, especially for the Bitcoin treasury companies. They're not doing anything with it. Eventually, they probably will be doing something with it to make money, whether it's lending, whether it's buying other companies, or taking out loans to buy real estate and back it with the collateral of the Bitcoin, stuff like that. But they haven't done it just yet. So the utility is really how Wall Street wants to rank these coins, not by market cap. That's interesting that they mentioned that here. Let's listen in.
World, how big do you think it could get? Because working backwards, that's what the 5% stake in ETH, right? Okay,
Yeah.
so what do you
It's
think?
about 480 billion right now of fully diluted network value.
Okay.
But
Is the supply contracting or not yet?
it's actually growing about 1%,
Growing
which is
1%.
slower than Bitcoin's inflation rate.
Okay.
It's actually a third of Bitcoin's inflation rate.
Okay.
Now,
How big do you think that could be?
Well, I think that there is a very high probability, I'm going to say maybe even 50%, that Ethereum's network value will flip Bitcoin's.
Wow.
Like when?
The flippening.
Maybe in a couple years.
People have been saying this for a long time.
Yeah.
How much bigger is Bitcoin now? Is it
It's
six times?
2.2 trillion right now.
And ETH is what, 400 billion?
Yeah.
All right.
But you're not an ETH maxi. You think
I'm not. I'm
you
still a
think there will be
Bitcoin bull.
both?
I think Bitcoin's
Okay.
going to a million, but I'm saying like Ethereum's relative size, the ratio will actually be 1-to-1.
How big could
Now, a lot of people say, okay, Cryptoviser, but how is this going to actually occur, right? Because I'm not actually opposed to the idea that we're going to see a flipping, and I'm not opposed to the idea that we're going to see $1 million Bitcoin. I just don't think it's going to happen in 2025. But as we've discussed, right, in my view, the market is trending to bear market. I'm with Peter Schiff on this, or Peter Schiff is with me. That we are going to go much lower in the prices, but this is going to be opportunity. We know there's going to be a new Federal Reserve chairman in 2026, regardless if it's because Powell's fired, quits, or his term ends as president. Because either way, his term ends in May as president. So there's going to be a new Federal Reserve chairman, and that is going to be very, very bullish. Period. So it doesn't matter how low we go, we're going much, much higher. And what's being implemented right now, and we can see that from what Trump media is doing with these deals with all the Bitcoin and Ethereum treasury companies continuing to just buy and buy and buy. It's not about where the price is today. It's about where the price is going to be at the end of this decade, at 2030. Because again, if you're so bullish about Bitcoin, the geoeconomic conditions are showing lower first. Then they're going to money print, the rates are going to go lower, and the markets are going to go through the roof, much higher than you can even imagine. This is where we could see the flipping. This is where we could get $1 million Bitcoin. But again, I think it's a little bit further out, maybe 2027 into 2028. But again, the lower we go, the more bullish you need to get. And so understanding like what is going on, not just in Bitcoin, not just in Ethereum, but in Solana, right? Everyone is trying to get ahead. They're trying to be the first. That way they get as much money as they can. They're raising as much money. This is where the value extraction in the market is coming from. They just want to be first, and they want to be ready for that. And Wall Street has a longer time horizon than many people in crypto, right? Most people in crypto, if they don't double their investment in a month, they're pretty upset. We're now seeing Pantera Capital seeking $1.25 billion for a Solana treasury firm. According to the information, the digital asset fund manager is reportedly planning to convert a publicly traded company into a Solana treasury firm, tentatively named Solana Co., by raising an initial sum of $500 million, then another $750 million through warrant issuance. This could potentially create the largest corporate Solana treasury in the world. Currently, public companies hold 3.4 million Solana, worth around $650 million. Pantera's latest initiative also coincides with yesterday's Bloomberg report of Galaxy Digital, Jump Crypto and Multicoin Capital ongoing project to raise $1 billion to establish a digital asset treasury firm to accumulate Solana jointly. This signals a broader trend of digital asset treasuries moving beyond the first movers to a larger established corporations beginning to deploy substantial capital. And here's the deal. Listen, I am not a big Solana fan, but Solana was built by and for the billionaires. So the billionaires, they know where the money's at. So here's what I foresee occurring, because this is occurring like with a lot of Solana and stuff like that. It seems like the billionaires were putting money into Solana when Solana first launched. Then it collapsed because there was a big connection to Alameda and FTX. Then it recovered because I think Wall Street and the billionaires were like, no, we need to get Solana back to where it was because it deserves to be there. Then Solana, right, had a meme coin fiasco in 2024 into 2025. And then that ended and pretty much Solana kind of got bored out. Nobody was paying attention to it. But I think that the billionaires who were still invested looked at it and said, like, we need to get out of the meme coin thing and get into real infrastructure plays. And to me, it seems like they're doing like they're building out the infrastructure for the next cycle. And the billionaires are now saying, like, we need, because we're building out all this infrastructure by, funding companies and funding development of the Solana ecosystem, we need to start getting Wall Street interested. Because if Wall Street's interested, our money it's guaranteed that it's going to go higher because, especially with the implementation across, the regulatory agencies and across companies and banks and finance using blockchain, using crypto. And so I think they're just preparing for the next cycle right now. And I don't think that they care where the price is. They just want to be the first. They want to make sure that Wall Street knows what Solana is, knows Solana is still being developed by the billionaires, and the billionaires are still interested in it. And I think that's the play right now. And then during the bear markets, remember, bear markets are for building. This cycle was like everybody's been waiting for alt season and for all these prices to go up 100x like we saw in the previous cycle. But most of these crypto projects, guys, they didn't do anything. They didn't release any revolutionary capabilities or technologies or partnerships this cycle. Last cycle, we had a lot of that, right? New technologies, new DeFi protocols, lending and borrowing platforms. You can earn yield on your crypto. Like, this was exciting. This cycle, there's been meme coins, Haktua coin, Argentina coin, right? All of these celebrity coins and the fundamental blockchains, most of them didn't release anything. And all the hype this cycle, all of the actual institutional pumps has been for Bitcoin and Ethereum. And every other ecosystem's like, well, we're just waiting for our ETF to get approved. And it's like, guys, when an ETF gets approved, that's bearish. For XRP, it's bearish. Solana, bearish. Avalanche, bearish. Dogecoin, bearish. It's going to be bearish for all of them. People don't see that. They're just like, oh no, this is so bullish. This is so bullish. And it's like, we're not going to have alt season this cycle. And the reason we're not going to have alt season is because a lot of these ecosystems haven't launched any new products. Now, keep in mind, a lot of them have. Coinbase's Base launched a lot of new features. We have Hyperliquid. Sui has been launching things just because Sui is new. You know what I mean? Internet Computer has been really pushing the whole AI infrastructure play situation. But Aave has been pushing, decentralized finance and integrations with traditional finance. Chainlink has been doing a lot of great things. So I'm not saying that none of these projects have done anything, right? But it's not to the degree that it was last cycle. And the hype, right? Last cycle, staking was rolling out. It started on Cardano and then it rolled out into Ethereum, then it rolled out into all of these other ecosystems. So people were excited. They're like, wait, I can make money on this. Wait, I can make money on this. Where's people been making money this cycle? In MicroStrategy, in Bitmine Emergent Technologies, in SharpLink. They're making it in the crypto arena, but they're not making it in crypto. And everybody from the last cycle is like, wait, why is everything not happening exactly as it did in 2020 and 2021? because that's not how cycles operate, right? Cycles do operate on a rhythm, but they're not going to be exactly the same as the previous cycles, right? And so this Solana treasury stuff is very interesting to me. And in a bear market, will I miss out on Solana again? Maybe, maybe, definitely, but I don't think so, because I think that the billionaires that keep pumping into Solana, I mean, it's also DeFi Development Corp. It's another Solana treasury company. They announced a $125 million equity raise for a Solana treasury. And so this is another one interested in Solana. And they already own quite a bit of Solana. I don't know where the number is. They own approximately, no, that's warrants. Anyway, you guys kind of get the point. In DeFi Development Corp, if we look at the price activity on this stock, you can see big pump as at the beginning of the year when they were starting to raise money, but it's kind of leveled out as it has with the Solana price. But maybe the market is pricing in that this may be the bottom for Solana, right? This $150 level in between the $8 low from the last cycle and the $250 high from this cycle. Maybe, maybe not. Let me know what you guys think about Solana and my thesis and theory on that, and whether it needs to be a buy in the bear market. Anyway, back to the Ethereum companies. ETHZilla authorizes a $250 million buyback and expands Ethereum treasury to about $500 million. The company holds 102,000 ETH. Now let's update this on Strategic ETH Reserve website just to get the most up-to-date. ETHZilla is showing, still 102,000. Now, this is another Ethereum company that is the board approved a $250 million stock buyback. So if the price goes below the NAV, they can buy the stock back, right? These companies are now arbitrage trading their own stocks, which is very interesting as well. But again, these companies want to act like an ETF, but they don't want to have, I think, the restrictions of an ETF, because an ETF is just an exchange traded fund. These treasury companies, they want to do something with the Ethereum, right? And so the ETFs eventually will have staking probably, so that you can earn rewards or whatever by holding the ETF. But I think these treasury companies, like I said, they want to do something with the crypto, loan it out, use it as collateral for other purchases that can cash flow. Like, think about it. If Bitmine Emergent Technologies gets up to like $20 billion, right, in assets under management, even if the price of Ethereum goes down, I'm talking about $20 billion, even with the price going down, they can take that Ethereum and then get a mortgage and then basically buy up commercial real estate for large multi-conglomerate corporations, and then just take the money that they're earning in the cash flow, buy more Ethereum. And eventually the cash flow will cover the collateral or pay they actually probably will never have to actually pay the loan down fully, because if Ethereum goes up over time, like, let's say it doubles every 4 years, which is basically about 25% per year increase. I mean, they're just going to, I feel like that's going to outpace the value increase of the land. Anyway, eventually these companies are going to do something with their Ethereum, whether it's real estate, whether it's DeFi, I don't know, but they're going to do something with it to earn even more. That is the play here. So they're trying to be like an ETF, but not have the restrictions of an ETF, right? An ETF is not a business, where a stock company is a business. So the company holds 102,000 Ether. They introduced a proprietary electric asset protocol aimed at boosting returns and expanding Ether reserves. That's interesting. At the current market valuation, they also reported holding $215 million in cash. They say, as we continue to scale our ETH reserves and pursue differentiated yield opportunities, we believe an aggressive stock repurchase program at the current stock price underscores our commitment to maximizing value for shareholders. And so they basically are saying that their stock is undervalued, right? So they own basically about just under $500 million in Ethereum. But their ether is about 500 million, and then they also have 200 million in cash. So technically, their market cap is lower than their NAV in what they actually have in physical assets. So yeah, they should be buying back their stock. But again, you can see the pump and then the dump right after the announcement of becoming an ETH treasury company. So I think there's still going to be downward pressure if we go into a bear market in a corrective phase. But this could be a great opportunity, guys. Great opportunity, because the billionaires and Wall Street, once they start investing in something, it's going to grow. Meanwhile, this user on X, Omid, who's an explainer-in-chief and adjunct professor, he said some composite thoughts on digital asset treasuries, which I wanted to get down while I was going. He said the most logical MNAV, or net asset value, for any digital asset treasury company is to trade it slightly negative to deeply negative. But the thing is, they can't do that if they start buying back their own stock. I guess it could, but they're going to buy back their own stock because then they could basically increase the value back to 1 MNAV. And if it goes over 1 MNAV, they can sell stock on the market. He said, while in theory, there is a way for digital asset treasuries to add sustained value, we haven't seen anyone do it yet, and the vast majority won't. Bitcoin is the hardest treasury asset for digital asset treasuries to add value because it's already ubiquitous and you can't do much with it. Bingo. Leverage is not a source of alpha, it's beta, and most likely misapplied by public company CEO cosplaying as hedge fund managers. The main motivation for launching altcoin digital asset treasuries is to give exit liquidity to founders, labs, foundations, and venture capitalists, sometimes via locked tokens, proving once and for all how farcical that concept always was and how little scruples many in the industry have. I've been saying this for a while. This is the exit liquidity. They're not buying these cryptos to make you rich, because they're not buying these cryptos on the open market. They're doing it through private sales. And again, like what they're saying, they're even able to sell the locked coins. So if somebody was an early investor in Solana and they want the money and they can't sell the Solana, let's say for whatever reason. I mean, at this point, I think most of the Solana is unlocked. But if you think about some of the other ecosystems, maybe it's still locked, whatever. If they want the money, they just give their locked coins to the digital asset treasury company, and the digital asset treasury company has no plans on selling those coins anyway, so they're just going to hold them, and they give you the cash. That's the exit. So if you're holding large quantities like billions of dollars or hundreds of millions of dollars, it's really one of the only ways to exit the market without impacting the price significantly negatively. And by the way, most of these cryptos, they don't really have that much there's really not that much volume on exchanges. Like, you can go on Coinbase, Kraken, Binance, and look at the exchange, like the order books. They're very, very thinly traded. He said, remember when the underperformance of some altcoins accelerate, they sold already. Public companies have significant operating costs and executives get high compensation. Who do you think pays for that? The asset management deals. Some of these signs seem shady. A lot of the people doing these, the investors, token contributors, managers, behave the way somebody does when they expect a high return with little risk. That's always a red flag. And that's the whole point of investing, right? Managing risk. And so I have been, sounding the alarm about top of market. And while I think most of my viewers get it, there's still a large cohort who are investing in crypto that don't understand how these markets work. They believe these digital asset treasury company CEOs that are saying we're never going to have a bear market again. And we haven't even retested $90,000. Like, until we actually go lower, I don't think we can go higher. Because if everybody's bullish, who's buying? You're going to say Michael Saylor. So you're putting your entire investment in one man's, hands, who's not even the owner of the company, right? He may have a lot of voting rights, but he's not even the CEO either. So this is where the risk is. Risk reward. Do I want to risk going down 50% and not having any money to buy back in? Or do I want only the reward of potentially going to 250 or 300. I'm still seeing $450,000 this cycle, which is not going to happen. But anyway, let me know what you guys think about that. But there's a lot of other companies moving into the digital asset space. Again, another Solana company. Sharps Technology announces $400 million private placement seeking to establish the largest digital asset treasury strategy. Again, we just talked about DeFi Development Corp. We talked about Pantera. Now there's another one called Sharps Technology, which is this is their website, making the world a healthier place. Sharps Technology is in the business of working with our partners to deliver practical solutions to the world's pressing healthcare challenges. It's very interesting that a lot of these companies that are switching to Bitcoin Treasury, Ethereum Treasury, or Solana Treasury, that they're medical companies. So is the medical company industry just too saturated, so they're looking for other ways to pump their stocks? But in my view, whether they are going to be digital asset strategy or not, or the biggest one or successful or not, I don't know. What I do know is that Facebook rebranded to Meta for Metaverse last cycle 5 years ago, and we still have no Metaverse. The cycle before that, Long Island Iced Tea Company changed to Long Island Blockchain Company. Didn't use blockchain for anything. They were still just an iced tea company. And so these are signals of top of market, right? And that's what makes me nervous about these asset treasury companies, because they could be buying up all the Solana right now. But if we do go into a corrective phase and Solana drops by 50%, that means the whole company's worth 50% less than it is today, at least, if not more. And the sentiment shift and the lack of trust on this whole, oh, Bitcoin's going up forever situation, I think it's going to have a lot more negative impacts on these stocks. I mean, look at this stock. It went from I don't even know how this is possible, $14,000 in the bear market, or into the bear market. Well, let's see where it was in I guess it IPO'd around here in 2022, and then it went straight down from $14,000 down to $6, $5. And now it's becoming a Solana treasury company. Okay, makes a lot of sense to me. Hemi closes a $15 million funding round ahead of a token launch for its Bitcoin programmability layer. And again, this is not a Bitcoin treasury company, but it's just an example that this is, when you see peak investment going on, this is the wealth transfer. It's the wealth transfer. And after a wealth transfer occurs, the market relaxes a little bit. And so we're seeing this across the board. A lot of companies, a lot of layers, a lot of like infrastructure plays are getting investment right now. And it's going to be bullish in the short term. But in the medium term, a lot of this has to be, developed out and then tested and then released. And this could take many, many years. And like I said at the beginning of the video, these ETFs that are being, I think, going to be approved before the end of 2025, a lot of people are going to look at it as bullish, like a bullish signal in the market, and they'll probably buy in. But I think that is going to be one of the final kind of guarantees that the bull run is over when these ETFs get approved, and they will get approved. But it's going to basically be the opposite of what it seems, because again, the market prices these things in before they actually occur. So if all of these ETFs get approved, who's buying? You're going to go buy that at all-time record highs potentially? Wall Street's going to go buy at all-time record highs? What's going to make them buy a Solana ETF versus buy a Solana treasury company? What's going to make them buy a Chainlink ETF versus buying a Bitcoin ETF? This is the question that we have to start asking. We didn't have these questions at the beginning of the cycle, because at the beginning of the cycle, we didn't have all of these different companies doing all these different things with all these different cryptos. But now they're all seeing that the cryptos that do this, the stocks that do this, they're getting the money. They're getting the funding, they're getting the investment, and they're getting the pumps in the stock. And so what are these other companies that are underperforming doing? One company goes from $15,000 to basically zero. And so what do they do to get a little bit of a pump in the market? Oh, we're going to start buying Solana. And listen, maybe that's a good pivot for them, but it could also just be a pump and dump. And it's already gone up just in, the last week, 163%. The last month, well, from the lows of 336, it basically went up 3x. After it came down from $14,000. I mean, I feel like anybody who looked at that chart would say, oh, we're at the bottom. But I would be asking, how did this company go from 14,000 to $3? How did that happen? And now they're gonna be saved and go back up because they're a Solana treasury company? They may. But if they're buying the top of the market or the top of the bull cycle, I don't know. Let me know what you guys think, because I really don't know what else to say. I mean, nothing has really changed in the cycle just yet. Nothing has really changed in my thesis. And I don't think anything has changed in the market. In fact, we keep getting more confirmation signals that the cycle has topped out and is losing strength. And so I'm not saying I'm bearish forever, but I'm bearish in the medium term. In the extended, like into 2027, super bullish, super bullish. But we have to dip before I can turn bullish. And we're already dipping. Just a question of how low the dip will go. I think Peter Schiff is right. I think 75,000 is a good kind of target range to look for. I mean, even if you don't think that 75,000 is going to be the number, if you think it's going to be 90,000, we'll look for 80,000. And if we do hit 80,000, look out below, because we may go much lower than that. Anyway, let me know what you guys think. Don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video. I upload every single day to bring you the latest happening in the financial world. Invest responsibly and crypto on.